when we're looking at the market, we're either going to see what's going on or we're going to see what we want to see. Remember the example. If you decided that the market was going up, in the next charts, you're going to see and focus more on the upsloping areas of the chart. And what this is called is a scotoma. So what is a scotoma? If you look traditionally, it's when you have a blind spot in your eye. But behaviorists, psychologists, have used it to describe a mental state. In other words, where you're looking at the market, you can see the market's going up, but because of an earlier chart, maybe you saw that the daily chart was actually looking like this. You believed it was going down, and perhaps the 4-hour is looking this way. If you believe that the market is going down, then you're going to focus on the area on the chart, the information on the chart that simply lines up with your opinion. That's a scotoma. And you've probably experienced this when you've been looking for something. In fact, if you've been looking for your car keys and you just know for a fact your car keys are not on the kitchen table, and you're looking around, and finally your friend, your spouse, your brother walks in and asks you, "What are you doing?" It's, "Wow, I'm looking for my keys. I can't find them." And they look on the kitchen table and they pick them up and say, "Aren't these your keys?" That's an example of a scotoma. You simply believe that they were not on the kitchen table when indeed they were right in front of your face. So, if we're looking at a chart, what's important is that we ask the question, where can the market go? Because it opens us up to the possibility of just about any direction. If we ask ourselves the other question, where is the market going? That's going to pigeonhole us into a belief, and it's going to pigeonhole us into making a decision and an opinion. So if we're concentrating now on where the market can go, based on this, we would either be able to say, well, I don't know, let's look. Well, there's only 2 days of an hourly bar. That's not enough information. Where can the market go from here? Well, we still don't have a whole lot of information. We've only got about 13 days, and we're still just looking at the hourly bar. Now remember, we're only looking at the hourly bar for patterns and support and resistance. We're not looking for it to set the trade up with our short-term trend, so we're going to have to get more information. That's the critical tool for you to use. Where can the market go? It's a very simple question with a lot of power. Now, Maxwell Maltz has some very important techniques for us as well. In his book, Psycho-Cybernetics, he suggested that our conscious mind actually filters what we see and what we hear, much like a film editor. So what happens is our conscious mind will edit our mental record of what is actually happening. Now, what this does is it reforms what we see and what we remember to conform to our beliefs. So, if you believe that the market's going up and you see this information, these are the actual trades. This is something called time and sales, and it's simply named this because you can see here's the time and here's the sales. Very simple. It's a record on when every single trade happened down to the second. So you have the date and then the hour, minute, second, and then the price. So if you're looking at this information and you think that the market's going up, your brain will filter this out and it will focus on the information that supports your belief. Now what actually happened is the market starts at 2604 and it ends at 2604. In the middle, as it's moving around, what winds up happening is your brain will focus on whatever information is coming to support your view. If you think the market's going up and you see that price is ticking up,